Now that all the big earnings are past us, I've had time to think and analyze my positions, and I want to share with you the three that I will be buying. And then there's one that I'm still very bullish on, but I might hold off. And so these I would consider my winning stocks. These are the stocks that are going to create a lot of wealth for myself because they have strong fundamentals, they're of high quality, and they have a wide moat. Things that keep the competition away and keep them thriving and dominating out there for my portfolio. So yes, these are the ones that I'm betting big on for the long-term profits and for wealth generation. I am not going to talk about three of my holdings though. I will not discuss my two REITs, that's VICI and Realty Income, as I've recently made a detailed, in-depth video of these two companies, and I discuss similar data that we'll be discussing today. So if you want to know more about those companies, be sure to watch the video I released just about a month ago, and it'll give you all the information you want. I also am not going to talk much, I might do a quick highlight here in a second, but about my speculative play with Health Equity. And they don't report until September 3rd, so I want to wait to do a dedicated video on this company after they release their earnings and I'm able to analyze the data and give it some thought. But here is a quick look at Health Equity's financial highlights as of the last earnings, and then I go out 2 years before that. So taking a quick look, free cash flows are growing, revenue's growing, and net income is growing. Now debt did spike up due to acquisition, but I expect that to kind of level out and then start going back down in the future. Really, this is a small company, but they do have a dominant market share. It's one I'm betting big on, but more on that in a later video. So let's get right into it. The first company that I own, it's a winning stock, and that I will be buying is the mighty Microsoft. Yes, if we look here at their financial highlights, they have growing free cash flows. That is so important for a company. Free cash flows allow the company to pay any dividends, to buy back shares, and to invest in the company to help it continue to grow. And then we have revenue. It is growing very sturdy. This is Microsoft for you. Long-term debt overall is going down and net income is rising. Microsoft is a perfect company when it comes to financials, close to perfect. I guess there's nothing that's perfect in this world. But a lot of companies thrive to mimic what Microsoft does, and they get jealous because Microsoft delivers quarter after quarter after quarter. So if we move on to the stock price targets, we'll see here that it has a low target of $430 and a high of $600. That's quite the range, and it is considered a buy right now by 52 analysts. So yes, I'm going to be buying, not just because of this, but because I know Microsoft has a dominant second place position with their cloud. It dominates the Office suite products out there, and that's not going anywhere. This company just has a lot going for it. The gaming is a promising side to it. That's one that has yet to be tested and proven. But regardless, this is one that I feel is very safe and still has a long runway of growth. And if we look at the numbers, this is called the surprise chart. So you know how analysts put their expectations and when they report, they either beat or miss. Well, the green, of course, if you see a green arrow going up, it's beating the expectations. It's a surprise. If it's going down, it's not. So we will see here with earnings per share, overall, you see greens across the board there at the top, except for this most recent earnings. And I do want to point out, you might Google this, Microsoft's earnings, and see that it was a beat, but this is with S&P Global's analysts, not other analysts out there that kind of come to a consensus. This is a little bit different. So I just want you to know that these might be slightly different than other sources that you pull from. But regardless, if you look at the misses, they're barely anything, a 0.25%. So honestly, Microsoft is still dominating, doing a great job. And if you see the cash flow per share, a very important metric, it kind of had 4 in the green of the last 6. So that is amazing. We're seeing the cash flow per share growing. That's giving us investors better value of our money that we're investing into Microsoft. Then if we move on, I just want to point out too on this chart, of course, there's a sea of green, a very few reds, but revenue green all across the board over the last 6 quarters, and free cash flow. They only had 1 in the red a year ago. So yes, this company's doing amazing. Microsoft is a beast. They're one that others just wish they could mimic their success. and it's one that I have high confidence in investing my dollars for future growth in that money. So yes, Microsoft is one I will be buying. Amazon is the next one. And if we look at its charts, what's really amazing is they had negative free cash flows for a while, and then they swung it massively into the positive. So that's a great thing. And I think this will lead someday, if this trend continues, into them paying a dividend. So I look forward to that day. But also revenue, it's holding pretty steady. It's growing over time. Long-term debt's going down, and net income overall is going up. So these, again, are great metrics from this company. Amazon, of course, is dominant with the cloud service, Amazon Web Services, and they have an amazing advertising opportunity and business that I think will just continue to grow and make us investors wealthy, because people are going to like the growth in that area, and it's going to represent through the stock price increasing. Now, if we look at their price targets, we'll see it has a low of 180 and a high of 251. It has been below the low now, trading for a while, so I've been buying, I've been scooping up shares. This is a company I will be buying continuously, because you got to think of it this way. Long term, 10 years from now, are you really going to care what the stock price is now based on your thesis? I think Amazon's going to be a beast of a company over the next decade. And so I don't care, honestly, right now, if it's below 200, above 200, I'm going to be buying, because my goal is a decade out. And in a decade out, I believe Amazon will be a much bigger company than it is today. And if we look at their surprise charts, we'll see earnings per share beats all through these 6 quarters. If we look at the cash flow per share, it kind of goes from the red to the green, back to the red. What you got to know with Amazon is their cash flows do swing wildly typically. And so I think analysts have a hard time measuring where they're going to be at. And if we look at the next chart, we'll see here revenue at the top, all greens except for the last quarter, but free cash flow, again, there's a lot of red, because I just think it's really hard with Amazon with their high expenditures. They really do not try to smooth things out like Microsoft. So it's really something that's hard for analysts. But overall, Amazon is a company that I see everywhere in my life. I use them. I know everyone in my life uses them. And I think that trend is going to continue to engulf this world of people utilizing the many different services and businesses that Amazon has. So I am betting big on this one as well, and will be buying. The next company that I am buying, and that is a winner, is S&P Global. This is a ratings company. It's a data company. Data is gold these days, and to have such a dominant company in that industry that I own and invest in, I think is very solid addition for my portfolio that will provide massive growth. So S&P Global, I think their cash flows have kind of stagnated, but you see these last 3 quarters have shown more consistency than the quarters before that, where it's a swing down, a swing up, a swing down. It's holding now, so I think that hopefully will position it to now go on a growth path. Revenue is growing beautifully. Long-term debt spiked up, but it's holding steady now, and so I do think that will go down eventually, unless if they do another acquisition, but I don't see one in their future, and net income is going up. So overall, very solid financials. If we look at their stock price targets, it's a low of $445 and a high of $575, and really they are trading above that low, so I'm not buying as strong as I am Microsoft or Amazon, but I think, again, long term, in a decade from now, I really won't care. So I am buying now, but I do think Amazon and Microsoft I'm still more bullish on in this instance. So I'd say this is in a third place. Amazon right now is in first, and then Microsoft, because I think valuation-wise, Amazon offers the best upside, but Microsoft is just a beast and will dominate over the next decade. So that's why it's a close second. And then S&P Global, to me, I think valuation-wise, company with their innovation, the future, what they do, I think is in a solid third place. And if we look at their surprise charts, we'll see that EPS has kind of gone from the red to the green. So that's a good swing up. And the cash flow per share has been overall in the green. So that's a positive sign. Revenue is all greens. This is amazing. I love it. And then if we look at net income, it is mostly in the red, but that's okay, because I think, again, with expenses, with acquisitions and stuff, it will fluctuate. And then free cash flow, really, it's kind of all over the place. They kind of had a big miss with these analysts from S&P Global. But overall, I'm not worried about this. I think now that we have some debt that will have to be re-rated in the nearby future, it's going to create a lot more revenue for this company. Data is gold, like I said. I think that's just going to become more and more valuable over the next 5-10 years. So I'm really betting big on this one as well. Don't think just because it's in third place, I'm not betting big on it. I'm betting big on S&P Global. Then we have the steady growth company that's still going to provide me wealth and profits, but maybe not as much as Microsoft or Amazon or S&P Global. But I think it's dominant in its industry. It's highly unlikely to be disrupted, and that's Union Pacific. Now, if we look at their charts, their financials, we'll see free cash flows have been trending down. Revenue has been trending down, but long-term debt's been trending down. That's the good downward trend. And net income has been holding pretty steady and going up over these last 4 quarters. So overall, it's not the most prettiest picture like the other companies, but you have to keep in mind with Union Pacific that this is the ultimate efficient way to transport goods is by railroad, by train. And that's something that no newcomer is going to dare to come in because of the massive cost that they'd have to undertake to build out a system, a railroad system that's already dominated by a handful of companies, Union Pacific being one of them. So that's what I like. This one is very unlikely to be disrupted. Now, if we look at the stock price targets, it's at a low of 210, has a high of 280. So a shorter range than the other companies. It is above the low. So this one, I am buying very slowly. I'm not buying like I am the other 3 companies, but long term, I think this one is the most dependable. It's just the one that's the least likely to be interrupted. And I think that's a good thing to have in your portfolio, a company like this. Then if we look at the surprise, we'll see earnings has been really good for a while now. We'll see that the cash flow per share has been more in the red than the green, but they do have high expenditures. These things flow through and affect cash flow. And if we look at revenue, it's kind of been a mix of red and green. And then if we look at the net income, it's also been mostly green actually, so that's positive. And then free cash flows have mainly been in the red. But again, end of the day, 10 years from now, the railroad industry is going nowhere, and it's probably still going to be the most efficient and effective way to transport large items, bulk goods. And again, it's just something I have full confidence in. This will probably be around, this company, the rest of my life easily, just like with Microsoft and then Amazon and then S&P Global. These are all very solid companies. So if we look at my portfolio, I just want to summarize here looking at it. Microsoft, Amazon, and S&P Global, they're all kind of next to each other. They're my main growth stocks I am most bullish on and hope to add more to these positions heavily over the next decade. Now, Union Pacific is my dependable growth stock, as I was talking about. So it's not high growth like the others, but it's dependable growth due to our reliance on its services. I don't see this one being disrupted in my lifetime and is one I can easily sleep at night with. Then, of course, my REITs are my income plays. So that's where my focus is there, and it gives me that exposure to real estate, which isn't in anywhere else kind of in this portfolio. There's some small concentrations in some of the companies here and there that might own land, but really my solid real estate plays for my income is REITs. And then Warner Bros. Discovery is one I think has strong upside potential. It's been really beaten down. It's very undervalued in my opinion, but I will sell this someday as it's not a long-term play for me. I got this as a spinoff from AT&T. What a gift, right? A beautiful gift. Not really, but it's one that I would have never invested in ever. It got it from the spinoff of AT&T, like I said. So one day I will sell that and put those funds somewhere else. Then we have my ETFs, and these are my diversified additions. So it's adding some protection for my portfolio. One is for income, and that's SCHD. You all know that one. And one is for growth, SCHG, and that one most people know of. But these are the ones that I think will just protect my portfolio. It's a balance of two good sides, income and growth, and a method that I've been wanting to do for a while. So I just added SCHG recently, and I'm very happy with that. So I have done a lot of change this year to this portfolio, sold many and added a few. I'm shaping this to be my winning portfolio with winning stocks and holdings that will make me wealthy long term. That's the goal for you and I. So following along with this channel, you see someone that's transparent and honest. I'll share the good and the bad. I think that's the best way to learn and grow. So I hope you consider subscribing. And also, I would like you to share your winning stocks that you have high convictions in, that you don't mind buying whatever price point they might be at now, because they'll be much stronger and better companies in the future. I'd be very curious to hear what you're betting big on. So that's all for today. We'll see you soon on Mark Arnold's Finance.